Hello. Yes, good afternoon, everybody. I hope you can hear my voice and also see my screen clearly. So today's webinar basically is going to be like an add-on on what we said previously about the 5-minute strategy. So you remember exactly when we talked about this strategy? We mentioned some things which are very, very useful. Then some of us ended up asking me to do at least another one, which is now for 15 minutes. So the main aim for us today is to look for this strategy. We want to try and build it from where we left it. If you have not watched the video on the 5-minute strategy, you can still look for it on our archives. It should be there. So I'll start by first mentioning what we talked about previously. We'll remove these indicators. So we'll remove all of them so that we have a clean chart. A second. We are now clean now. Okay, so as I mentioned previously, the most important thing about this strategy is the previous day's extreme levels. So what that means is the previous day's highest high or the previous day's lowest low. The previous day's highest high or the previous day's lowest low. Or the previous 4-hour candle's highest high or the previous 4-hour candle lowest low. So when we have this, for example, assuming we have this is yesterday's candle, we have something like this. We have this is the candle. This is the candle. We have the high here, and then we have the low of this candle. So technically, I'm referring to this candle here, the one where I'm having this vertical line. So if you check the 15 minutes chart, what I mentioned previously, it was on the 5 minutes chart. So if you check the same day, this is the same day. Look at what happened. This was the lowest low. Just a sec. I've removed the red line, and then this was the day after that. Okay. So what I mentioned was this previously, that once you mark the previous day's lowest low and the previous day's highest high, watch for what happens when the price approaches that level. If the price comes to the same place and then suddenly breaks beyond it and then maintains itself below that level, then that is a very good sign that somehow we are continuing in that direction. But if the price breaks below that level and then begins to consolidate below the same level, that means we've actually gone below a very significant level and we are finding it hard to continue in that direction. So there's some indecision. So the fact that the price cannot clearly continue down immediately is a very good sign that we are not able to continue below. We are not able to pull back above. We are still trying. Are we supposed to go up or are we supposed to see price continue the lower side? That's one example. Another thing which I mentioned is that when the price goes below the previous day's lowest low, when that happens, normally you'll see like a converging wedge formation or an expanding wedge formation or a triangular formation or a rectangular formation below that level or just around the same place on a lesser time frame. So as much as this is a daily level, we've looked at the previous day's lowest low, the previous day's highest high. When the price goes below this level, it's very good to switch to a lesser time frame, that like 5 minutes or 15 minutes. Then pick that shape. Like in my case here, watch for this breakout. And then after the breakout, there are multiple shapes which are forming. Like we have that. This is another one here. And then we have another one here. Then we have another one here. So you can see that it actually formed a very, very good converging wedge formation. So the idea behind all this, it's not to, we are not so much interested in buying a reversal inside this shape, but we are interested in selling or buying a breakout. Like when you have this shape here, when the price breaks above, this usually is the correct place to look for a buy from. So immediately after the breakout, you look for a buy. When the price goes above like it did here, this was the correct place to look for a buy from. You could have basically just picked a buy here. Does that make sense? So you look at this below the previous day's lowest low or above the previous day's highest high. We'll check the next example. So this we'll now switch this to 15 minutes so that we see whatever I'm saying. Let's look at how clean that was. You can see it is perfectly a converging wedge formation. You can see that we had a very good breakout. Then you can see also that we have a very good pullback. So this here was the best place to look for a sell from on the 5 minutes chart. And after this breakout here, this here could have been the correct place to look for a buy from. So remember the title for this webinar, we said that we look for a pin bar, we look for an engulfing candles, we look for all those candles, and then see how they relate with whatever we are looking at. So anytime, like when you have the 5 minutes chart or the 15 minutes chart, and then you notice that a shape is forming, like you realize that we are actually seeing some sort of converging formation. Look for pin bars that are supporting reversals within that shape. That is, when we have a shape like this, if the price touches this point and you see a bearish pin bar, you pick a sell. You see a bearish pin bar, you pick a sell. You see a bullish pin bar like the one you have here, you pick a buy. A bullish engulfing, you pick a buy. You can also pick a buy based on reversal patterns like this right here. This candle here is actually a reversal pattern. This here is a very good reversal pattern, the one you have here. So you take this candle, take this candle, you take this candle, could have bought this one here, which means the touch from this point was actually a good place to buy from. So the other thing is, after the breakout, if you see a pin bar or a bullish engulfing candle, also pick buy positions. So these are the instances when you see a bullish pin bar, a bearish pin bar, a shape forming, then that shape becomes actually something interesting. We'll look at the next example. Yeah. So something else, look at this. Yeah. I want us to, let's see if we can get enough data for, I don't think we'll be able to get 5 minutes for that one. But then let's look at this here. Let's look at this example here where we have this big candle here. We want to see if we had any opportunity to either sell it or buy it after the break below the previous day's lowest low. So we have this high here, and then we have this low here, and then I'll mark that day. We have this one here. So we go to 5 minutes starts immediately. See what happens. So we'll scroll back. Let's see. Nothing much. Not yet. Okay. I believe it's this day here. So this is the daily low. We want to see when the next day's candle actually touches that line. So we see that actually it touched it, but nothing much happened. Okay. So you can see it touched it, but there's no shape below it, so that was not a very good one. Then this day here, this was the low, and then this was the high. This was the high. So you can see that the price attempted to break below, nothing much happened, but there is something which is standing out on this one, that we still have some shape. We still have some shape which formed. Look at that. Then pick this from the bottom. So in this case here, it actually formed an expanding wedge formation. So you can see we have a resistance here. You can see we have a support here. There is this breakout which happened. So if you could have sold it there, you could have had your stop loss here. So the price eventually went our way. There was no pattern which formed other than the one we had here. So the most interesting thing, the most interesting thing is if the shape forms around the previous day's highest high or the previous day's lowest low, then that will give us the correct place to look for a trade from. Like in this case, we could have taken a sell here. Our stop loss is fixed above the high of this candle, above the high of this candle. And then the take profit, you may be wondering, the take profit is actually 2 times what we have as the stop loss. So if we have the stop loss here, the take profit should be 2 times the distance between this and this, which should be somewhere around this area here. Does that make sense what I'm saying? Okay. So we look at the next one. Let's see. Go to the daily chart and then we check. We'll check GBP USD. So like in this case, we have this candle here, the previous day's candle. Let's see if you are having any shape currently forming. We have the high here and we have the low here. This is the previous day's candle. So we check the 5 minutes chart. So you can see that the price actually hit this level here, but there's nothing much which happened. It didn't break beyond it. But if, for instance, in the next few hours the price can break above this level and somehow keep itself above and form some shape, then that will be the ideal place to look for a trade from. So that will be the best place where we actually want to pick a sell from or a buy from. So that should be it. The same principle applies to the 5 minutes chart. We look for some shapes. Then when the shape forms, you look for maybe the cans patterns which I've mentioned, like you look for a reversal patterns around the trend lines which are forming that shape, or you can look for the candle, the shapes which I've mentioned, I mean bullish pin bar, bearish pin bar along the tails, I mean the trend lines for that candle. So thank you very much. That should bring us to the end of this session. We'll meet again tomorrow at this, I mean on Wednesday at the same time. Thank you and see you.